Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, staying market prudent while being a tax student. Let me explain, right? With the Trump tax and market bump, right? We've seen a lot of things respond really, really well. In fact, there's a strong indication that came out at the end of this week that with the unemployment rate ticking up just a little bit and with the non-farm payroll numbers coming up a little bit better than expected, it wasn't too hot, wasn't too cold, kind of the Goldilocks of understanding that the Fed now has priced in an 88% probability of dropping interest rates when they meet here in the next couple of weeks. That's all somewhat positive in the economy. The market turned up, but we've seen the market turn up. We've seen the market turn down. And what we've seen more of is the market turning up. And a number of you have reached out. And I think we kind of went from one concern to a new concern, right? The old concern was not knowing the outcome of the election. And had it gone the other way, we knew taxes likely were going to go up much quicker. Now, because of knowing the taxes aren't going to be going up much quicker, with obviously having a pro-low tax president coming back into office in President Trump, the market is now starting to head up. And a lot of us have still kept a lot of what we've saved, if not the majority that we've met from all around this country, in these traditional IRAs and 401ks that eventually the tax will have to be paid. And the longer you defer, the bigger the balance becomes, the more tax you'll have to pay. Now, that's assuming tax rates don't go up. Just the cost of living going up is going to make things more expensive as it relates to taxes. Well, that triggers what we call the torpedo of taxation: higher taxes on Social Security benefits, higher taxes on Medicare premiums, and then, of course, the uncertainty of just how much higher tax rates will go, because there's a lot of indication that even with President Trump's administration extending the Tax Cut and Jobs Act, that's going to add, on top of no tax on tips, no tax on Social Security, and no tax on overtime, somewhere in the neighborhood from nonpartisan think tanks of tax, about $4 trillion. Well, you look at the fact that interest rates don't just come down overnight, folks. And if we're going to add to the deficit by trying to grow our economy, and we're seeing that with the market responding very positively with President Trump getting reelected, we're still going to have to fight the evil dragon of debt and the interest on that debt that unfortunately isn't going to bring taxes down overnight. So we'll likely see from some of the top economists and some of the top think tanks of tax that we subscribe to, we're likely going to see taxes maybe go up a bit and likely not see inflation come down near as quick, or interest rates not being able to come down near as quick. And just the interest on our debt alone, folks, is running about $1 trillion plus. So when you run a $2 to $3 trillion annual deficit, right, more going out than you have coming in, and you got a number of people that are retiring, right, 4.1 million people turning 65 just in this calendar year alone, and that's going to be pretty consistent over the next couple of years. Fewer people paying into the tax rolls, right? More people needing to pull from the entitlement programs like Social Security, Medicare, et cetera. That is just a strong equation for higher taxes. And unfortunately, a very unknown outcome to the market, right? Because if more people are tugging, more people want pulled in the wagon, right, than they're pulling the wagon, that's going to make taxes go up. And if more people are tugging, to pull money out of the economy to live off of, to create their own paycheck, that's going to make the markets very volatile. So I think the name of the game is be market prudent, but be sure you're being a really good, strong tax student. So go to retirementprotected.com. That's retirementprotected.com. And let me teach you strategies that will help you be market prudent and a great tax student, so you can remove yourself from the tax system, right, with the legal least amount of tax with our tax team. Have a well-written, comprehensive tax wealth optimization plan, right? Some people have a portfolio, some people have a plan. The key is having a plan so it can address all these aspects, but have upside opportunity with no downside exposure, so that you can be market prudent, right? Don't take unnecessary risk that's not needed. Be sure to protect principal, but also have the upside opportunity to get equity-like returns, so that you don't have all your money obviously exposed to the stock market. And if you're going to do that, make sure it's institutionally managed, where it's targeting the risk that you want to target, not the fund manager or the do-it-yourselfers that think maybe they're diversified when maybe they're not as diversified as they could be. So imagine removing yourself the predictability of removing taxes, especially before these balances go higher and you have to convert a higher amount. Learning strategies, I'll teach you this Tuesday at retirementprotected.com. That's retirementprotected.com. Again, it's a complimentary log on and learn educational webinar where I want to teach you what you can do with credits and deductions and things like that through our tax team that help build that into a well-written tax tax and wealth optimization plan, especially for those of you that are trying to find a way to get to retirement. Imagine saving that tax and being able to retire sooner, but also being able to retire at the highest balances so that you, right before you retire, now that some of you have just retired, we don't go through some unfortunate, as I talk about in Hidden Wealth Radio this weekend, kind of hangover of the market, kind of having a euphoria of Trump getting reelected and then falling back off, because we're seeing a lot of this up and down. Let me remove the wobble so that you have the opportunity to protect yourself, being prudent with Wall Street, but also getting rid of the taxes on Main Street, folks. RetirementProtected.com, retirementprotected.com.